Welcome to Tradespoon and Yellow Tunnel. Today, we're going to have a live trading room open to trade stock and options using our technologies. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. We're live on Discord. Lady Godiva, Indignant, and Weapon Wolf. Love the names. GoToWebinar is a little bit more straightforward, but welcome. We're live on Discord and we're live on GoToWebinar. If you have any issues with seeing the screen or hearing me, please let me know, since I have to navigate both. Good morning, Yuri. All right. For those of you who are new, welcome. If this is your first live event, welcome. This is my brief bio as Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Very proud of the experience. I want to say thank you to all the subscribers, whether you're on Discord or on GoToWebinar. Because of you, I'm able to do what I enjoy professionally. Managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. If you're new to options or you're new to Yellow Tunnel or Tradespoon, I encourage you to spend some time on optionsclearing.com site to understand the risks associated with trading options or equities in general. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm here to show you what I do in my own account based on my own experience level and portfolio size. For educational and informational services only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, very important to have a pre-market routine, right? To watch the news, right? CPI data, very important, better than expected, market rally, at least last time I looked at it. And you want to have a journal, right? In your journal, you want to write down very important rules. One is cash. I propose we're still above 20. We'll probably remain above 20 for the next 6 to 12 months. So 50% in cash. I think this is the rule number one. And I would write this down. And the goal is not to break this rule, right? The goal is to concentrate on the process, not on the outcome, right? We're all here to make money. We're all here to hedge our portfolios. We're all here, supplemental income, but it cannot be at the expense of the process. And the process starts as pre-market routine, right? You get up early, you do push-ups, you walk outside, and then you have a cup of coffee, and then you write down, right? In your journal, I write down every trade that I make and I grade myself. A or B if I follow my plan, or C or D. A and B if I'm process oriented and I follow my process, I follow my plan, and then sometimes I make money, sometimes I don't, then it's A or B. If I break my process, maybe I don't have enough cash, or I have too many positions, or position size is incorrect. Those are the three most common mistakes we all make, right? Not having enough cash, number one. Number two, too many positions. Number three, position size. Then I would grade myself C or D. And the idea is to review your trades, both positive and negative, right? You don't want to overly concentrate on negative trades. You review positive and negative, and then you follow the process. Second one is, again, position size, portfolio drawdown. Why portfolio drawdown is important? Because it determines number of positions and position size. I encourage you to have only 4 positions, right? I mean, if you're a professional trader, you've been trading for many years, you have large portfolio over, I don't know, $50,000. Okay, maybe you have 6 positions, right? Or, but if you're managing others people's money, okay, maybe you have 12 positions. I get the exceptions, but for average retail investor, I would propose to have 4 positions with maximum loss of 2.5% of account value per position. How do you determine 2.5% of account value? Let's look at the let's look at the chart. So CPI data print, we are up almost 2% pre-market, retesting the recent high, actually breaking slightly above August high and June high. So assuming we're going to close at the same levels or better, we are on our way to at least retest 50% retracement, right? If you look at the 52-week high and you look at the 52-week low, 50% retracement would be 421 level. So that would be the next level of resistance, right? 50% retracement. This is the January low, the first reactionary low. And this is also close to the May failed rally. So this is resistance number one, right? Short term. The resistance number two would be the January downtrend, which starts here, second leg here, and then you have 200-day moving average, right? So that's resistance number two. So let's say you are, well, I'm bearish, right? So 418, you know, CPI data is better than expected, so that's a win for the bulls. But still, you know, service CPI, wages, rent, housing prices, there are still a lot of inflationary pressures, and one data point doesn't set the trend, right? I still think that Fed is gonna remain hawkish and continue to raise interest rates. So let's say you go, I'm going short, right? So it reaches 420 and I sell short here. Right, you sell short here. I don't know if you guys have any questions. Let's see. Okay. So let's say I sell short at 418 because I don't think this resistance once is going to break, right? Then I need to decide on target gain and stop losses, right? Target gain next level is probably, well, let's see, let's say I want to capture maybe 15 points, right? 400, right? So 400 level, right? So that's my target gain. What is my stop loss? Well, my stop loss is, again, if we break above 200-day moving average and we're trading above the trend, then, you know, we have to get back in the whiteboard and figure out, you know, is it the better than expected earnings, better than expected inflation data, you know, maybe Fed can orchestrate soft landing, right? So if we are trading above 200-day moving average and we are trading above the downtrend, then bulls are in control, bears have to, probably will be a lot of, you know, shorts will get squeezed. So you have to get out of this trade, right? Somewhere above, I don't know what, you know, 430, let's call it 432, right? For 432. So you have 418, 432, 15 points to the downside, right? So based on your stop loss, 15 points to the downside. And maybe if you're bearish, I don't know, you can structure your trade 1 to 2, 2 to 1, however you used to do this. Let's say you're looking for 400 level, right? Drop to at least 400 level. So you're down 15 points and up 15 points, right? And you think that risk versus reward is better to the downside. So I would write this in the journal, right? I'm selling short spiders, right? I'm targeting 15 points, you know, 3% move, 4% move. My stop loss is 15 points. Now, what is my position size? So hopefully now you have appreciation that this exercise is extremely important. Right? A lot of people would say, Vlad, why do you think about negative, you know, why you're so bearish or why you're so bullish? Well, it's not being bearish or bullish. I need to determine position size because I know number one mistake is that I'm buying too many shares, right? That is the most common mistake everybody makes, including professional traders and non-professional traders, you know, who do this for one day or, you know, 30 years. So I need to go through this exercise and write down. So this is what I'm targeting, right? And then my stop loss, and then what's my position size? I propose average account is $10,000. So not to risk $250. If you're doing day trading, it's less than 1% of 25,000. That's $250. If you carry position overnight on a $10,000 account, 2.5% is $250. $250, 15 points. That's approximately 16 shares, right? So 15, 250 divided by 15, this is 10. Let's call it 16. 16 shares, right? So 16 shares, right? So you would sell 16 shares, you can do dollar cost average. Maybe you sell 8 now. You don't want to kind of trade into, you know, what if we do get to at least 420 or 425? So maybe you sell 8 shares at 418 and you sell another 8 shares at 425. And that's your calculation. So this process is extremely important. I would document this process, right? Maybe put down steps, you know, before I make a trade, I keep a journal, you know, I document how many points, I grade myself, and you don't deviate from this process. The most common mistake would be to trade 16 shares, right? Risk $250, and then let's say market does continue to rally, right? And we are above this trend. We're, let's say, at 440, right? And then you basically say, well, I'm still bearish. You know, core CPI is, you know, 1 month's worth of data. One data point is not enough. Fed is still hawkish. You know, we have 2 consecutive, you know, quarters of negative GDP. You know, service PMI continue to be a lot of inflation. And so you convince yourself, or you give yourself reasons why market will sell off. But the problem is, what if you're wrong, right? What if we are orchestrating soft landing and market goes to 460 now, right? Or 450, right? So now you're not down $250, you're down, let's say, $500 or $700. You multiply this by 4, you're down 20% of your portfolio. And market is going to remain volatile, right? We have, you know, 25% down, 20% up. We're going to have these moves throughout the next 12 months. So you want to make sure that you are not overly leveraged in your portfolio. So I encourage you to always go through this. Dr. Duke, welcome. Let me know if you guys can see my screen and hear me. Stream chat, I'm monitoring stream chat on Discord. So that's the most important calculation that I encourage you to always do. You can be, you know, if you're bullish, it's the other way around, right? The reverse. Let's say you think we're going to get to at least 200-day moving average, 430, great. You know, you're looking for 13 points to the upside. You know, probably, you know, if we drop below 400, or this is the next stop loss, I think this is the first resistance level, sorry, support level. Your support level is last week low around 408, and then the next one would be 400, right? Support 1, support 2. Then these would be your stop loss. If you're bullish and, you know, market trades below 406, well, probably market is going to, you know, this 38% retracement. If we're below that level, then probably market is going to be in trouble. Any questions? All right, let me know if you guys have any questions. Give me 1 second, just looking for the questions. Bob, hello. No, I did not review my positions. So review spiders. Let's review the positions. Tomorrow showing uptrend to 430 for the next 10 days in spiders. So let's look at the spiders. In terms of trend, it does show uptrend, right? And potentially reaching 430, which is completely possible, right? It is completely possible. We do have PPI data tomorrow. And I would wait for the close today because we are, one thing, one of the rules is, again, wait for 2 to 3 days to confirm some kind of a trend change or breakout. So we're definitely in uptrend, right, for the past 7 weeks. So uptrend is intact. We are facing a lot of overhead resistance at this 421 level, right? So I would not. There's very little room to the upside. So from my perspective, I would want to, if you're bullish, I would at least want to wait for the market to trade above 421 level, right? If the market trades above 421 level, then I would probably exit out your short position, or at least downsize your short position, or go long, right? But until market breaks above 421 level, 50% retracement, and we're below 200-day moving average, again, this is still a bearish setup. We have PPI data tomorrow, which could be, worse than expected, or it could be better than expected. So I would just wait for that breakout. But I'll review the positions. But again, market could reach 430 level, right? Model shows you that bulls are in control right now, and the path of least resistance is to the upside. All right. Any other questions? All right, so let's review the positions. First, let's do the earnings, right? So win flat after the earnings. This was, again, one of my favorite strategies is to trade sell premium, option premium, right? Because market could be very volatile, right? Market could rally today 2% on CPI data. If it's worse than expected, it would have sold off. But one thing that you do know is selling premium. So this is AIG trade, right? We did AIG trade. The earnings, you have additional volatility, right? You can do this on indexes. You can look at the range where the stock can trade on ETF or index or specific stock, and do the same strategy, which is very popular, selling premium, right? Iron condor, selling put spreads, selling call spreads when the volatility is above average. Or you can have an additional spike in volatility by selling premium. So this was an example of AIG, right? So I sold 25. So looking at the premium, I'm looking for 0.5% on the inner strikes of the short legs of the spread. So 49 put, 25 cents plus 15 cents is 40 cents. 40 cents on the $50 stock, this is 75 basis points. So in this example, I'm looking for 75 basis profit, and I'm closing, and I close this position now. So 56 call and 49 put, I'm out of this trade. And AIG, after the earnings, not going anywhere, right? It's not going anywhere. $54.66. So that's AIG trade. And then Win Resort was the trade from yesterday. Similar approach. I sold the inner strike 58.5 put, right? So it's a $6 spread. Here's $7 spread. So two spreads. One is the bearish call spread, one is the bullish put spread. The idea that it will trade in certain range, right? That the stock or ETF trades in a certain range after the earnings. Collected 20 cents plus 20 cents, that's 40 cents. 40 cents on the $70 stock is again less than 0.5%, 0.5%. So let me put an order to close this position. All right, so the short put, I'm going to try to close for 3 cents. And I'm going to try to close short call for also 3 cents. And same thing with plug, right? So if you did the plug, it's up 10%. It's still out of the money. TTD is close, right? If you sold put spread and call spread. All right. So far, QQQ is up. Let's look at QQQ. Up 15%. Semiconductors are underperforming and spiders are high. All right, let's go over the other position. So I'm out of AIG. So next one is CVS. Again, the idea is to trade win. So win resort, I'm trying to close 58.5 put for 3 cents and 73 call for 3 cents to close the iron condor. Osama, thank you. Thank you. Yeah, we'll see what, where we're gonna close today and tomorrow in terms of the next move. All right, so we went over FWIN. Next one is CVS, right? So CVS continued to trade around this position. Bought at 102.29. I trimmed yesterday at 104. CVS is underperforming today. So no changes. Let's look at TTD. Right. 10 minutes. Okay. Look at spiders. Similar price pattern. Okay. So this is CVS position. That's the stock. FCX, both bullish and bearish. I do have 35 call. FCX did rally today, right? I would keep an eye on two important data points. One is the 10-year yield. There's not a lot of jump, not a lot of movement based on CPI data. Usually around CPI data, yields move in fast. Right now, 40 basis points, so yield still inverted. A little bit, it was a little bit steeper in pre-market. Now it's kind of even out. So 40 basis points, we're staying at 2.7, right? That's the trend line. So as long as the yield is stable, I think that's neutral for the market. But I still expected a larger move. And then dollar did pull back significantly, basically retesting August lows, right? And the 50-day moving average, and that's a lot of support at 105, which is short-term bullish for the market. Short-term bullish for the market, but for the rally to continue, I think dollar has to break below 105, below this level. Whether it will or will not do that, I would keep an eye on it. But for the rally to continue, dollar has to drop to 104. We'll see if that's going to happen or not. Meanwhile, QQQ is up 2.5% and Spiders is up 1.8. All right, that's FCX. So I do have 35 call. FCX on the weaker dollar rallied again 3.5%, but it has hard time getting above 50-day moving average, above this downtrend, about 32. So again, I think if dollar continues to go lower and market continues to rally, then FCX calls will continue to rise. So short term, I think market can continue going higher, right? The momentum is behind the bulls. Longer term, I'm still hedging and overall bearish on the market. I don't know if you guys have any questions. So that's FCX position. IWM, I did close. I thought we actually gonna have a negative reaction, so I closed the call spread on IWM, and now I have a put spread in September. So I mean, similar price pattern, right? IWM, it's facing 200-day moving average, right? It's actually trading above January and February low, which is positive. But for now, it's trying to break through this level. Let's see if it's able to do that or not. Put recommendation, Carnival Cruise and ARC. So these are two bearish trade ideas. I mean, I would to add on bearish position when the market rallies, I would wait for at least some kind of indication of reversal, right? So right now, you know, QQQ is up 2%, semiconductors, so I would not short the market at this point, right? I would wait for some kind of reversal. You know, if you see that for the next 2 to 3 days we cannot break above 420 level, then maybe I would add a bearish trade, but not at this point, right? Because, you know, the signal was generated on the weekend, and you know, there is no, models don't know about the CPI data nor CPI reaction. Now reaction is positive. The market is trying to break out of this range, right? 417, 420 level. Whether it will or will not be able to do, it's too early to tell, right? So if we're not above 420 today, we're not above 420, you know, tomorrow, this week, you know, Friday and Monday, then, you know, the momentum will decelerate, and then potentially market will pull back. But for now, I would wait. Thank you, Scott, for the question. Can we see a quick reversal to the downside? You can always see a quick reversal to the down, right? Question, can you see a quick reversal to the downside? You can always have that, but something has to change. And usually it would come either from a dollar, right? Right now, dollar is weak, so that's bullish. There's no sign of reversal. Yield inversion kind of actually right now is steepening a little bit, but it's still 10-year yield 270 and 2-year yield, you know, pull back significantly, 5%. And then high yield also is facing overhead resistance. So for now, you could have a quick reversal, right? But most likely, you know, it's not going to happen today, right? Unless there's some kind of news in the market. Thank you, Ted. September 19, Bank of America. I'm bearish on banks. So if you have a cover call, it's a nice breakout. JP Morgan, you know, they're all rising on the, you know, slight steepening of yield curve and better than expected inflation data. But again, I would not chase this rally. You have a cover call, it's a bullish position. Again, you know, you can wait to see a reversal, right? I mean, as long as the market above this 407 level, right? As long as the market is 407 level, your cover call should be okay, right? And most likely for the next week or two, we will trade in this range, right? It may be higher highs and higher lows. Bank of America 34, let's see, 34. Well, at this point, you're in the money, right? You're in the money. I mean, I would just look at that cover call. If it's September, you don't have any extrinsic value, so you can just close it, right? Because you're limited on your upside. I assume you don't have short, you know, you only have short call, you don't have a long call. You're 88 cents in the money. I would look how much extrinsic value. I assume not a lot. So then again, you have the limited upside, but unlimited downside. How would TLT move now? Again, this divergence, right? Technology is up 2% and TLT is up 0.5%. We talked about this, that this trend will probably not last a long time, right? Either TLT gonna continue going higher and QQQ will pull back, which I think is more likely scenario in the next 2 to 3 weeks, or TLT will reverse, right? Yields are gonna go higher, TLT will go down, and QQQ will continue its rally. But so far since June, this is a divergence, right? This is a divergence. So I don't expect, you know, I personally don't expect QQQ to continue go higher. So I think QQQ will pull back. and TLT will continue going higher. But again, similar price pattern, right? This overhead August high, right? Most of the indexes are facing with August high and trying to break out of this range. We just have to wait and see if it's going to be successful or unsuccessful. Let's look at QQQ. Still trading in the range. All right, any other questions? All right, let's continue. So QQQ. All the positions are in December or November. So I have a bearish call spread and I have a bearish put spread, one of my largest positions on QQQ. Again, I think September we might continue to trade sideways. We might even make new highs, right? We haven't broke through August high yet. But I think the momentum will decelerate or is already decelerating, right? We haven't posted new highs since beginning of the month. So I think the sideways range trading will continue, maybe another week, maybe another 2 weeks. I just don't know. And potentially slightly higher highs, higher lows. But I think market is going to struggle with 200-day moving average or 50% retracement, both on spiders and QQQ. So for that reason, I'm not touching QQQ, same trade. If you're not comfortable trading options, one way to hedge in robo-investor or profit accelerator services is to sell SH, inverse ETF, right? With the idea that inverse ETF, out of those 4 positions, I would consider at least 2 bearish positions out of 4. One of them could be SH, right? The inverse ETF will trade inversely correlated to the market. Thank you, Kevin, for your thoughts. Thank you, Kevin. I see use Fibonacci lines. Why? Well, because everybody's using Fibonacci lines, right? On ETF, Fibonacci lines are extremely powerful, right? It's kind of self-fulfilled prophecy. It's herd effect, right? If everybody watches Fibonacci retracements, then it will probably happen. But it also gives you idea who's in control, right? If you look at short term, since June, bulls are definitely in control, right? We have 6-7 weeks of higher highs, higher lows. You zoom out to 8 months, right? Definitely bears in control. We're still trading below 50% retracement, below 200-day moving average. So if everybody's watching on these Fibonacci retracements, then most likely that's what's going to happen, right? So this is a good way to identify next level of support and resistance levels to help you with stop losses and target gains. AKG, welcome. Let me know if you guys can see my screen and hear me. I encourage you to type in inside of the stream chat on Discord or on GoToWebinar. All right, few announcements. Please join us on YouTube channel, right? You can see live on Monday and Wednesday on Discord, on Wednesday morning bell and closing bell, right? So today, closing bell, I will do another earnings strategy. I think Disney announced earnings, so we'll do the Disney trade similar that I did to Wynn Resort and AIG this week. There's no financial commitment, right? This is something that you have an opportunity to join for free without any financial commitment. Hit subscribe button. Please like these videos. I enjoy seeing likes. And then if you do like the video, please share it with if you're part of any trader community, whether it's on Discord or Wall Street Mavens or I don't know Facebook groups, trading groups, cover call, iron condor groups. You enjoy if you think the content is useful and you like iron condors and you're part of iron condors Facebook group, then I would appreciate if you share these videos. And also donations for Ukraine, right? Ukraine, the war is still raging on. Millions of families displaced. It affects kids. So I've joined the board of directors on gate.org. I'm going to put that here. Please consider donating to help directly families. The money would go directly to the families. Gate.org. All right, those are the announcements. Let me know if you have any questions. And let's see. XLF and XRPs. So the final two positions, again, I'm bearish on the banks. So I still have a put spread, but in December, right? Banks are oversold. They can continue going higher, but I think eventually they will drop in price. So it's a put. I have a put spread, 35-30 put spread, bearish, and then bearish credit call spread. Sold 35 call, bought 38 call. Thank you, Kevin. Thank you, Sama. Let's see, any other questions? Thank you, Kyle. Thank you for sharing. All right. Meanwhile, let's see how we're doing on Win Resort. Okay, so getting close, maybe a couple cents away on Win Resort. TDD, let's see, 15 minutes. Continues to trade sideways. Blog continues to rally. And then QQQ is trading sideways. Let's look at the other indexes. I mean, ETFs. All right, so across asset rally, home builders are up, facing June high. Metals and miners are up, actually broke through the 50-day moving average, 200-day moving average. So metals and miners continue to outperform. Materials breaking out of the range, facing the overhead resistance. Germany is higher, facing June high. Let's see, China is down on the higher than expected inflation, underperforming. Energy is weaker, underperforming today. Junk bonds trying to break out of June high, up 1.5%, so risk on. REITs are up, breaking out. Utilities are up, retesting 52-week high. Consumer staples retesting June high. Let's see, Russell 2000 trying to break out from the June overhead resistance. Consumer discretionary, same pattern. Transportation breaking out, up 2.5%. Banks up 2.25%, doing a catch up, but underperforming the rest of the market. Let's see, QQ, we talked about QQQ is up, facing June high. Semiconductors are underperforming. XLK facing June high. And then spiders, same thing, facing June high. Any other questions? Any questions on Discord? Any questions on GoToWebinar? Bob, I'll wait for the market to settle in. Let's look at the earnings today. I think Disney, if I'm not mistaken, is announcing earnings. I mean, market is volatile. I don't want to do it ahead of time, right? So Disney does have earnings today. So Disney, I will do Disney. All right. So Disney, I will do Disney after probably the last 20 minutes. You will see him in the earnings power trader. So either we'll see him here. So there are two places to see the details. I mean, one, you've seen the win, but I would have to look at the, again, make sure there's enough premium, but assuming there's enough premium, which usually there is, you know, this is the list of stocks that, you know, were candidates. So I did win, I did EMR or AIG, sorry. I did AIG, I did win. I'm gonna do Disney. Going into the earnings, I mean, it shows the uptrend, kind of trading in the range. So you will be able to see all of the orders here, right? You will see all of the orders in the earnings power trader or in Elite Circle, both on Tradespoon side. Both sides will show you the same information. Bob, thank you. Thank you, Kevin, for history lesson. I appreciate it. Advisory report recommends fertilizers. Okay. I mean, they're obviously in uptrend. Thank you for sharing. Yeah, John Disney, estimated move analysis. Right. On Disney estimated move analysis, let's look at Disney as of right now. So Disney, let's do 2 times the move. We can move up to 8%. It can move up to 8%. So let's see. Trade option. Maybe we'll put an order for now. Disney. 8%, 1 or 2 put is actually 65 cents. So I can probably go into, let's look at Disney. It's actually pulling back. So it's actually pulling back. Let's see. QQQ is pulling back. Spiders slightly. TDD slightly. All right, so Disney, for now we'll do 100 put, sell to open 100 put, but I'm gonna put it away out of the money. And we'll see. Because I'm concerned that if it continues to pull back, then we might get too close. So I don't want to kind of do it, but you should be able to see this now. Right, so I'm putting for now away out of the money. It's trading at 40 cents. So by the end of the day, I'm gonna sell the put and the call. Put spread and a call spread. For now, I'm just waiting to get more clarity. John 103, very nice. Thank you, John. Suggestion jumping on QQQ puts. Scott, again, some side of stabilization, right? My rule is usually 2 to 3 days. If we're not going to break out for the next 2 to 3 days, then I would enter the put. But for now, you just don't know, right? It's kind of, or if you're, or you're a tactical trader, you can basically say, Vlad, I don't want to wait. I can buy a QQQ put now, but have a stop loss, I don't know, 328, right? Or something along those lines. But usually 1 day does not make or break the trends, right? The point is that QQQ is unable to break out of this 326, 328 level for the past, 2 weeks, then you just want to wait, right? So you want to wait. Thank you, John. Thank you, John, thanks for your comments. Scott will, today is Wednesday, so Scott will cover Wednesday. Tomorrow I will do the trading discipline webinar on yellow tunnels. So if you guys can join 12 p.m. tomorrow, 12 p.m. tomorrow. Thursday, and again, please join us on YouTube. And if consider donating to gate.org to help Ukrainian families. Yes, Ted, I will complete Disney before the end of the day. Ganesh, any reason oil to pull back today? Well, it shows that oil prices are down, right? One of the reasons we have a rally, right? Because product CPI is down, right? Which is food and energy. So energy is significantly down. You know, that's why crude oil continues to go lower, because, you know, energy prices are down. And dollar is also down. So, I mean, that's the reason. I assume it's because of the CPI data. But bigger reason, the reason this is a downtrend, the main reason is that, again, supply is limited, but Fed will probably continue raising interest rates, and the economy will continue to slow down, and demand for oil will continue to slow down. And that's reflected in this downtrend. And I think it's just a matter of time to break through this level, 87. It might not happen today, or it might not happen, you know, in the next 2 weeks, but in the next 2 months, it will happen, right? And the only way to interpret this is that the economy is slowing down. Thank you, Ganesh. Thank you. All right, guys, that's all I have for today. You've been wonderful. Thank you for your support. I will see you, well, tomorrow morning, live trading room. Please join us on YouTube. Consider donating to Ukraine, on Discord, and I will see you tomorrow morning. Thanks a lot.